Nvidia didn't just lead the AI revolution, it was the revolution. It was the chosen one, the anointed prophet, the high priest of silicon, the stock that could do no wrong. But in February 2025, the invincible finally bled. 5 trading days, 1 earnings call. And just like that, Nvidia lost 15% of its value. Wall Street didn't flinch, it blinked hard. Because this wasn't just a dip, it was a crack in the myth, a reminder that even gods have limits. And if you're still treating Nvidia like a buy and hold forever stock, you might be walking blindfolded into a loaded minefield. This is the side of Nvidia nobody wants to talk about. But after this, you won't be able to unsee it. Coming up in this video: 1. The February Freefall, a warning shot, not a fluke. 2. The valuation cult, why faith is not a business model. 3. Export bans and the China meltdown. Nobody's pricing in. 4. The TSMC Timebomb. 1 island, 1 supplier, 1 Spark 5. GPU-free AI. Nvidia's existential nightmare. 6. Volatility isn't a bug, it's the entire game. 7. Long-term headaches, dependency, disruption, and dev exodus. 8. The smart money exit, who's sneaking out while retail holds the bag. Welcome to 10D Insights, where we cut through the noise and give you the real story behind the stocks you love or not. Let's start with what really happened in February. 5 days. That's all it took for Nvidia to shed more value than most companies ever create. 300 billion evaporated like it was nothing more than hopium smoke. And what triggered it? Earnings. Good earnings, by the way. Nvidia beat expectations, solid revenue, nice margins. But here's the kicker: it didn't deliver a miracle, and that's what it was priced for. Let's break this down. Heading into February, Nvidia was trading at 75 times earnings. That's not bullish. That's cult-level pricing. That's, we believe this company will rule the world, cure cancer, and maybe colonize Mars with AI-enhanced raccoons kind of pricing. So when Nvidia's guidance came in as normal, margins shrank just a touch. Growth slowed just a hair. Wall Street panicked like someone just whispered quantitative tightening. Because when you price a company for perfection, anything short of divine intervention looks like a miss. Here's the brutal truth: Nvidia is no longer being judged on performance. It's being judged on mythology. And in February, that mythology took its first real hit. Let's talk numbers. But don't worry, I'll keep it Gen Z friendly. Nvidia's PE ratio, post-crash, still 63x. That's not just high, that's nosebleed, altitude sickness, oxygen mask high. And that's after the drop. Before the correction, Nvidia was brushing up against 75x earnings. That's not a stock, that's a tech religion. Now, here's the kicker. Apple is trading at 30x, Amazon around 40x, and Nvidia double that, priced like it already owns the next century. But here's the uncomfortable math. Growth is slowing, not collapsing, but definitely not matching those euphoric multiples. Earnings per share growth, still solid, sure, but it's decelerating, like a McLaren easing off the throttle after hitting 200 miles per hour. And then there's the PEG ratio. That's price to earnings growth. You know, the thing that tells you if a stock's growth justifies its price. Nvidia's PEG over 2.1, which means we're officially in delusion premium territory. Here's how that works in human terms. You're paying Ferrari money for something that's starting to look more like a very fancy electric Lexus. Still fast, still shiny, but not exactly launching into orbit. What do you call it when Wall Street thinks a stock is worth anywhere between $450 and $1,200? A consensus? Nope. That's called a valuation identity crisis. The truth is, Nvidia's price is not riding on cash flows or fundamentals anymore. It's riding on narrative velocity, the belief that it's untouchable, unstoppable, and maybe even immortal. But belief is not a business model. And momentum? It cuts both ways. When that belief starts to wobble, even a little, this stock doesn't correct, it craters. Forget AMD, forget Intel. Nvidia's biggest threat? 2 words: export controls. See, for years, China was one of Nvidia's fastest growing markets. We're talking 20 to 25% of data center revenue, billions in demand, all from one region. And then, Washington entered the chat. The US banned Nvidia's top AI chips, A100s, H100s, from being sold to China. Nvidia responded with compromised chips, like the H800. Guess what the government did next? Banned those too. Because apparently, when you try to design your way around sanctions, lawmakers don't say, "Thanks for being clever." They say, "Try again." Now you're done. These weren't just customers, they were Nvidia's growth engine in Asia. Now, gone. Cut off, ghosted. And here's what Wall Street refuses to admit. Nvidia is not just losing sales. It's losing momentum in the world's second largest economy. And if Nvidia can't sell into China, who fills the vacuum? You guessed it, China itself. the CCP is not sitting on its hands. They've poured tens of billions into building homegrown alternatives to Nvidia's GPUs. And the reason is simple. They don't want to be dependent on the US, not for chips, not for software, not for anything. China sees AI as a strategic weapon, and right now, Nvidia is caught in the middle of a tech war disguised as a trade war. It's not just about chips, it's about power. Wall Street's official position: it's all fine. This is priced in. Priced in? How do you price in a geopolitical decoupling of the world's largest economies? You don't. You can't. So instead, they pretend. Because if you admit that Nvidia's growth in China is permanently capped, that the world is bifurcating into GPU East versus GPU West, then suddenly that 63x multiple, it looks insane. Let's clear something up. Nvidia doesn't manufacture anything. It designs the most advanced chips in the world. But those chips, they're physically born in one place: TSMC, Taiwan Semiconductor Manufacturing Company, the single most critical chip maker on Earth. And where's it located? Yep, Taiwan, a democratic island that China publicly claims as its own. Now imagine this scenario. You're Nvidia. Your entire supply chain depends on TSMC, and the one country that makes your chips might get invaded at any moment. No TSMC equals no GPUs equals no Nvidia. This is not some black swan event. It's a known risk that everyone on Wall Street chooses to ignore because they can't model it. There is no contingency plan for China bombs Taiwan. Even temporary conflict equals chip supply frozen. Best case, fabs are shut down for months. Worst case, nationalized, destroyed, or seized. TSMC is not a vendor. It's a single point of failure for Nvidia's existence. But what about Arizona? Aren't they building fabs there? Yes. TSMC's US plant in Arizona is coming online in late 2025 or 2026. Sounds good, right? Wrong. That plant will handle older chips, like 5 nanometer nodes. Nvidia's cutting-edge AI chips need 3 nanometers or smaller, and those are still exclusive to Taiwan. So even in the best case, if Taiwan goes dark, Phoenix won't save you, Texas won't save you. Only Taiwan can keep Nvidia alive at the bleeding edge. This is the powder keg. US aircraft carriers running freedom of navigation, OPS. China surrounding Taiwan with naval exercises, rhetoric hardening on both sides. No diplomatic off-ramps in sight. And one miscalculation, one stray missile, one cyber attack that goes too far, game over. And again, Wall Street completely ignoring it. Because you can't run a DCF on World War III. So if you're betting your portfolio on Nvidia, you're also betting on Taiwan never blinking. And that's not a risk, that's a gamble. Real quick, if you're into no BS breakdowns like this, hit that subscribe button. It tells the algo you're not here for hype. Let's ask a question no one on Wall Street wants to answer. What if the future of AI doesn't need Nvidia? Because Nvidia's entire dominance is built on one sacred assumption, that AI needs GPUs. But what if that assumption is already breaking? Enter DeepSeek AI, a research group from China you've probably never heard of yet. In early 2025, DeepSeek dropped a bombshell. They trained a GPT 3-level LLM using 0 Nvidia GPUs. No CUDA, no H100s, no Jensen in sight. Instead, they built their own AI accelerators, custom chips, homegrown frameworks, total Nvidia independence. And get this, training time, comparable. Performance, roughly on par. Cost, significantly lower. This is not some toy experiment in a basement, this is the future, on a different track. DeepSeek is not alone. Google has been using TPUs for years. Tesla built Dojo, a GPU-free supercomputer just for self-driving AI. Meta is experimenting with custom silicon. Amazon is quietly building in-house chips to replace external vendors. Even Microsoft is dabbling in FPGA/ASIC acceleration. The shift is happening, not because GPUs are bad, but because they're too expensive, too power-hungry, and too Western. Here's the brutal irony. Nvidia's own success is driving companies to cut it out of the loop, because no one wants to be locked into a single supplier forever, especially when that supplier's charging premium prices and sitting in the crosshairs of global politics. Open source AI stacks are rising, alternative training methods are improving, and once performance gets good enough, it's game on. Think back, remember DVDs? They were the thing, massive, ubiquitous, essential, until streaming came along. No crash, no drama, just obsolescence. What if Nvidia's GPUs are the DVDs of AI? Still useful, still everywhere, but not necessary. And here's what's really scary. Wall Street is not talking about this, because it doesn't show up in guidance. It's not in any spreadsheet, and if it's not in a spreadsheet, it doesn't exist. Until it does. If AI continues evolving without GPUs, Nvidia doesn't just slow down, it loses its reason to exist. And that is not just bearish, it's existential. Let's clear something up, because this myth is dangerous. Nvidia is not a safe long-term tech compounder. This is not Apple. This is not Microsoft. It's not some slow, steady blue-chip juggernaut that makes investors sleep easy. Nvidia is a financial roller coaster strapped to a rocket engine, fueled by Red Bull, retail hopium, and GPT patch notes. Here's Nvidia's real playbook. 1. Massive growth cycle. Gaming, crypto, AI boom. 2. Momentum builds. Retail piles in. Third, valuation explodes. Everyone screams to the moon. 4. Growth plateaus. Orders slow. 5. Reality hits. Stock tanks. 6. Rinse, repeat. This company doesn't glide. It whiplashes. Look at the track record. 2018, crypto bust, GPU glut, shares plunge. 2022, macro tightening, valuation implodes. 2023 to 24, AI hype, stock skyrockets. 2025, one soft quarter, and boom, $300 billion wiped. Nvidia's ride is thrilling, but it's not for the faint of heart, and the market knows it. That's why Nvidia is one of the most heavily traded options tickers on Earth. This is not just a stock. It's a casino table where institutions trade weekly contracts like Pokemon cards, gamma squeezes, fourth crush, retail FOMO, earnings roulette. You're not investing in the future of AI. You're vol trading with extra steps. Earnings day with Nvidia? It's like watching a SpaceX rocket launch. Either it soars or it explodes on the launch pad. No middle ground. That's why hedge funds treat it like a hot potato. They ride the hype up, then quietly rotate out the back door before it burns their eyebrows off. And retail? They're the ones left holding the bag, wondering where their tendies went. So let's recap. You're buying into a stock priced like a divine prophecy, anchored to geopolitical chaos, running on the fumes of exponential growth, traded like a leveraged meme, and surrounded by alternatives that don't need it anymore. But yeah, totally a safe long-term compounder. Definitely something to pass on to your grandkids. If volatility is Nvidia's personality, then these next issues are its chronic internal disorders, things Wall Street refuses to talk about, because they're not sudden, they're systemic. They don't crash the stock overnight. They just rot it from within. Nvidia's growth has never been linear. It's been cyclical chaos, gaming surges, inventory glut, crash, crypto mining boom, GPU mania, collapse, AI cluster arms, race. Every wave brings euphoria. Every peak is followed by a crash landing and a garage full of overstocked GPUs. Why? Because Nvidia builds for demand spikes, not long-term balance. And when demand cools, even slightly, it's left holding the bag. Inventory bloats, margins compress, retail gets wrecked. You can't grow forever on hype. Eventually, you overextend. And right now, we're nearing another inventory tipping point. Here's a stat nobody likes saying out loud. One customer accounts for over 35% of Nvidia's data center revenue. Take a wild guess who that is? Microsoft, which is great, until it's not. Because when your entire quarter depends on one giant's budget allocation, you're not in control. They are. If Microsoft slows spending, builds custom chips, or ditches CUDA, boom, Nvidia's earnings take a direct hit. No warning, no buffer. CUDA is Nvidia's secret weapon. It's their walled garden, their iOS, their moat. Developers build inside it. Universities teach it. Startups grow dependent on it. But guess what? That lock-in is breaking. Open source AI frameworks are rising fast. PyTorch, JAX, Hugging Face, MLIR. And these frameworks, they're decoupling from Nvidia's hardware, which means in the near future, you won't need CUDA to do cutting-edge AI. You'll just need silicon. When that happens, Nvidia loses its software monopoly, its stickiness, its edge. It goes from being the platform to being just another vendor. Let's talk about Jensen, the leather-jacketed legend, the architect of Nvidia's empire. He's been cashing out, over $90 million in stock, sold in just 6 months. Now, maybe that's normal, maybe it's just portfolio management, or maybe he sees what's coming. And if the guy who built the rocket ship is quietly bailing out of first class, should you really still be fighting for a seat in coach? This is not about doom, it's about denial. A company this overexposed, this overpriced, and this overhyped, with fundamental cracks beneath the surface, that's not a long-term play. That's a high-stakes balancing act. And gravity always wins. If Nvidia is the market's chosen one, then why are its biggest disciples already backing away? Let's break it down. Top funds aren't shorting Nvidia. They're not sounding alarms. They're doing something way smarter. They're slipping out the side door, cutting exposure, rotating into safer bets, rebalancing without saying a word. Because the golden rule of Wall Street, when the retail crowd screams, "Hold the line," The pros are already halfway out the building. These aren't panic moves. They're surgical exits. A little less exposure here. A few million shares there. Why? Because they know the truth. The real risk is not that Nvidia crashes overnight. It's that the narrative breaks. And when narrative breaks, multiples collapse. Nvidia's price is not supported by cash flow. It's supported by hope. And institutional money doesn't cling to hope. It clings to arbitrage. So when they sense the tide turning, they don't wait. They front run it. They rotate early. They exit clean, leaving retail to play musical chairs while the music's already cut. Wall Street's already hedged. They've bought puts. They've taken profits. They've prepared for both outcomes. You're still listening to Reddit, CNBC, and Twitter Spaces. But let's be real. If you're buying Nvidia right now without understanding these risks, you're not investing. You're the insurance policy for someone else's gains. A company priced for perfect execution in a world on fire, dependent on one island, under pressure from governments, competitors, and customers, with smart money quietly fading out, and GPU-free AI rising quietly from the shadows. Still think this thing is invincible? Let's be clear. Nvidia is still an incredible company, visionary leadership, elite engineering, a genuine pioneer. But the stock? It's a high-wire act, 300 feet above ground, juggling flaming knives, in a windstorm. Any stumble, geopolitical, technological, or financial, and this whole thing comes crashing down. Nvidia is not doomed. But if you're betting on invincibility, you're not investing, you're gambling. And history has never been kind to that trade. But don't worry, Kramer still loves it. What could possibly go wrong? Like, subscribe, hit that bell,